Deeper speculations about production cuts and strategic discounts have added fuel to the fire of financial debates. Exhilarating for some and nerve-wracking for others in the midst of these debates, one thing is certain. Tesla continues to captivate Wall Street, Main Street, and every street in between. Additionally, when market titans like Cathie Wood and her ARK investment firm make moves like buying or selling Tesla shares, Wall Street takes note of their recent transactions, which have drawn mixed interpretations. For some, it's a tactical decision to diversify and capitalize on profits. For others, it's a sign to reassess the EV market's valuation as it shows the story of vision, ambition, strategy, and resilience behind Tesla's stock performance is not limited to the financially savvy. As the company forges ahead through commercial highways and innovative lanes, all eyes are focused on its journey, which promises to redefine not only mobility, but also modern economics in the grand scheme of the financial world, where every thread relates a tale of rewards, risks, strategies, and visions. Specific stories. One story that particularly stands out and garners worldwide attention links the future of automobile technology with finance acumen is that of Tesla. And in the midst of this developing narrative, another significant character, Cathie Wood, emerges. Cathie Wood is the driving force behind ARK Invest, an investment management company renowned for its bold wagers on the future. When discussing ARK Invest, one cannot overlook its unwavering commitment to disruptive innovations, from fintech to genomics. ARK has repeatedly demonstrated its capacity to predict the course of technological advancements, but among its varied investments is its unwavering belief in the electric vehicle. In recent trade, the revolution that has Tesla at its core has been nothing short of legendary. Let's explore this intriguing alliance of trust, strategy, and vision in more detail. Revelations. The deals that ARK Investment Management has made with Tesla have been numerous and well considered, causing a significant unload of over 975 Tesla shares on what appeared to be a routine day was a move that garnered media attention. This was immediately followed by a smaller exchange of 107 shares, then at the conclusion of the week, a sell of 16,617 shares. Even while these actions are hugely valuable, their consequences are even more enormous. However, what motivates these choices? One could question. In the world of investments, storylines, attitudes, and future trajectories are just as important as numbers. Cathie Wood, who is renowned for her rigorous investigation and unconventional viewpoints, may be noticing trends. Perhaps these sales are a result of a determined strategy to take advantage of other forthcoming opportunities rather than a sign of waning faith in Tesla's vision. Trends and future pathways that many people could overlook balance ARK's varied holdings, or perhaps take a different approach to utilizing Tesla's potential in the future. Despite the recent sales, a closer examination of ARK's ETF structures offers interesting insights. Yet, ARK's actions, particularly its recent sales, have raised eyebrows and sparked curiosity. Are they seeing a shift in the dynamics of the EV market, or are they simply positioning themselves several moves ahead, ensuring long-term victory? Tesla remains a dominant force within ARK's portfolios, particularly in their flagship ETFs like the ARK Innovation ETF and the ARK Next Generation Internet ETF. Such allocations underscore ARK's continued belief in Tesla's potential to redefine mobility and energy in the upcoming decades. Remember that the entire electric vehicle (EV) ecosystem is rapidly changing as new startups introduce groundbreaking technologies and legacy automakers step up their electric ambitions. The environment is both promising and challenging. Furthermore, ARK Invest may be adjusting its tactics to maximize earnings from this dynamic sector given its keen focus on the future. Recognized for her open conversations, Cathie Wood's public observations and insights provide an additional level of understanding. This dance between Tesla and ARK Invest is a fascinating one. It's a ballet of numbers. Wood has frequently highlighted the significance of agility in investment strategies, ensuring that ARK's portfolios are optimally positioned to harness disruptive innovations, even if it means making difficult decisions in the short term. Here's to the electric dreams, strategic plays, and the undying spirit of innovation that keeps the financial world spinning, and stories like these ever evolving as the exciting story between Tesla and ARK Invest plays out. Another group we should talk about are the analysts. Think of them as the behind-the-scenes detectives who help people understand what's going on with companies and their stocks. They do a lot of research and use their experience to make educated guesses about where things might go next. When we talk about Tesla, it's not just about cool cars or its global trends, and public opinion on the market are discussed by the analysts here. serve as our guides and help us make sense of all the little and major developments involving Tesla. Analysts have been discussing Tesla's latest pricing moves a lot, even if many customers are pleased with their lower car costs. Analysts are questioning why Tesla lowered its costs. Is it because there is more competition today, or is Tesla merely attempting to increase sales? Alternatively, perhaps they are figuring out ways to reduce the cost of cars and passing those savings down to customers. Expert Dan Ives, who frequently discusses Tesla, expressed astonishment at these price adjustments, saying that the price decrease was obviously somewhat unexpected. This proves that even experts can be taken aback by what Tesla decides to do next. In addition, Ives pondered whether Tesla's vehicle costs may stabilize and cease fluctuating so drastically. Analysts are also interested in other things Tesla does, such as the recent decrease in car production. Was this due to factory upgrades, or are they attempting to balance the quantity of cars produced with demand to avoid having an excess of unsold vehicles? Cars also, while we see what Tesla does like dropping prices or making fewer cars, analysts help us understand why they might be doing it. For example, when some car workers went on strike at companies like Ford and General Motors, analysts thought this might be good news for Tesla. Why? Because Tesla doesn't have these kinds of workers' strikes, they might have an edge over their competitors. But analysts don't just tell us about what's happening now, they also try to guess what might happen in the future. They look at how Tesla's stock is doing, what the company plans to do in different parts of the world, and what new things they might release next. They take all these pieces of information and try to paint a picture of what could come next. While we're all watching the big moves from companies like Tesla and smart investors like Cathie Wood, it's the analysts who help us make sense of it all. They don't just tell us what's happening now, but also give us hints about what might happen in the future. In wrapping up today's deep dive into the dynamic world of Tesla, ARK Invest, and the ins from our analytical experts, it's clear that the automotive and investment landscapes are changing quickly. We followed Tesla's price changes, seen how Cathie Wood and ARK made calculated investments, and learned what the experts spot of these significant plays. However, there is still uncertainty about where Tesla will go next in this roller coaster of market fluctuations and investment strategies, as well as how influential investors and market analysts will affect or respond to these shifts. We appreciate your time and will see you again. If you liked today's analysis and would like to receive updates on any news pertaining to Tesla stock, please press the like button and subscribe to our channel. Cathie Wood, the visionary investor, who is well known for her bold decisions, has made news once more. But this time the focus is not only on the numbers, rather, it is on the narrative that lies behind the scenes and may hold the key to solving some of the mysteries surrounding Tesla's shares, including why this transaction occurred and why now. The complexities of market dynamics, investor emotion, and the ever-changing field of innovation hold the keys to the solutions. Keep an eye out because the road ahead is full of curves, and we're here to help you navigate them. But first, click the like button and subscribe to Tesla Stock News to keep informed about all things Tesla. Let's get started. The electric world is booming, and we're not just talking about charging your batteries for tonight. We're talking about the EV Titan, which is a game changer. Tesla's electrifying developments for 2023. Let's start by discussing pocket-friendly moves. The US Model 3 RWD is an engineering marvel that is now priced even more marvelously at $38, $8,990, down by a refreshing $1,250. For those who always crave a bit more, whether it be range speed or just plain luxury, the Model 3 long range and performance hasn't lagged behind, with prices set enticingly at $45,900 and $65,900. The good news is that Tesla has slashed it down by a hopping 25%, bringing the Model Y long range into the limelight at a cool $4,849. However, while we celebrate these price tags, let's hop across the pond. Europe. This is where things take an interesting turn amid the excitement of discounts and price drops. Tesla is making strategic moves, starting in Norway, hinting at a larger European narrative. Are more price adjustments on the horizon for our European friends? This is a question that every enthusiast and investor has on their minds. Tesla has been subtly providing significant savings on cars in the US and Europe. Why is this generosity being sparked? Industry insiders and market analysts are closely examining this move, but there's more to this story than meets the eye. The third quarter saw a decrease in Tesla output, and there are many theories as to why. Are major plant renovations in store, or is this a calculated move to control and optimize inventories? The company's past indicates that it doesn't take snap judgments. As the market for electric cars continues to change, every decision is well considered and every tactic is utilized. Tesla continues to be at the center of change, igniting discussions and influencing the future through pricing changes. Tactical reductions and adjustments to production. The corporation is illustrating its vision for the electric future in vivid detail. All we can do is watch and hypothesize, and of course, enjoy the trip. Now let's shift gears and take a closer look at the financial freeway, where Tesla is controlling the speed and trajectory of its stock performance as both the driver and the vehicle. As you are aware, the financial market is a dynamic entity that moves in time with the cycles of world events. What's the hype around Tesla's stock performance recently? In the past, Tesla stocks have resembled a roller coaster ride due to business decisions, investor attitudes, and the arrival of players like Tesla. If you've been observing the market graphs, you probably noticed the resilience of Tesla's stocks despite minor setbacks. They've managed to pare early losses, which speaks volumes of investor confidence in Tesla's future trajectory. It's not just about selling cars. It's about the larger vision of an electric, sustainable future, and Tesla's pivotal role in that dream.